Good morning, everybody. Hope you're all doing well. See, like I said the other day, we don't have any news. A tentative situation is causing things not to show up, or they're just not giving the announcements, I guess, for whatever. Well, for the shutdown, obviously. But yeah, good morning. Good morning, everybody. Let me know if you guys can see the screen okay, if you can hear me okay. Let's actually jump to this real quick. Tell me how you guys can see everything on the chart. I'm trying out the low latency again, so I need your guys' assistance. I think it's like a 2 or 5 second delay. Okay, so all good, all good. All right, perfect. So yeah, like I said, there's really not much to anticipate in terms of news. So whenever there's no news, we look at the open price at 6:30 as our volatility injection. Okay. So we're not going to make really any decisions until then. So yeah, let's actually go glance at the bonds and yields for a minute. So we got our previous week's low. This is the weekly chart. So yeah, we got previous week's high here, previous week's lows from a couple weeks ago. We got multiple weekly lows in here. We are hanging inside this fair value gap. It's also inside the upper quadrant of the monthly inversion fair value gap, which is this right here. All right. I mean, we could see how this has been respected for the last couple of weeks, right? Well, months, right? Since July, we kind of been stuck inside this range, or inside this fair value gap. So, and each quadrant level has been pretty significant in terms of reaction, right? 25%, 50%, 75%. And we kind of tried to break out of it, but we've pretty much came right back into it. We got relative equal highs up here. Again, the bonds are important because this indicates or influences pretty heavily what the foreign currencies are going to do and what the indices are going to do. And it reverse correlates with the DXY. We talked about on Sunday this delivery, right? Price trading back into this gap in here. We kind of gapped through this fair value gap. It's kind of spent some time in it, right? Kind of bounced around a little bit. Let me see something real quick. Yeah, so it's kind of bounced around in here a little bit. We're still holding, right? This blue arrow, if we break outside of these areas in here, we'll end up going higher. If not, if we respect this and it gives us another displacement that gets, kind of deep into this area, I don't think it'll be reliable to try to see this run aggressively. It is the first week of the month, so you got to think of power 3. If we're bearish, right, it should go up first. What should it go up for? It should be going up for a PD array. Okay? And then once it fulfills that, we could then try to see in that area, wherever that PD array is at, if we can get a response back below the Sunday's open price, right? Or just towards that. So it could be a bearish week. Again, for now, we're kind of stuck between this high and this low. So if we measure that out for the bonds, okay, we're kind of at equilibrium. Ideally, if we're going to go lower, I would definitely like to see price get back down below this area here. Given the fact that we're kind of in the middle of things, also if you go from this low to that high, I believe we're at equilibrium there too. A little bit beyond, kind of at a discount, but we're definitely racing back towards the equilibrium, right, from this high to that low. We have taken buy side up here, taking sell side in here. So you can reasonably map out, if we're going to go lower, you can map out the premium and discount given the upper high up here. Then again, you can also go from this. And we can kind of see the reaction there. It spent a little time in here with this balanced price range up here, as we talked about, and it's continued to just decline. So again, we're at a level, at a discount relative to where we're at in the chart. If it's going to buy, again, we want to break above these levels, right? So far, though, structurally, it hasn't changed from the bearishness. So, these are just some things we got to keep in mind with the bonds and yields. These are the yields, right? So DXY is influenced by this. If it goes higher, it supports bullish DXY, bearish indices. And this is the bonds, right? It impacts positively the indices and foreign currencies. So DXY, all the other assets, essentially, right? To keep it simple. Right. So again, we're in the middle portion here as well. We're at a potential turning point, or a significant level, I should say, that's going to, in my opinion, with that NFP this week, set the tone, right? So we definitely want to keep this in our crosshairs and just kind of observe what's going to happen. It's not really doing anything super influential at the moment. So again, we're just in a mode of waiting. If we were going to trade this asset, we would not be looking to engage. We'd be looking to wait for some displacement because it could honestly do, whatever it wants. When it can do whatever it wants, or we feel that it could do whatever it wants, right? And it's kind of like a 50-50 shot, taking out the lows or just being a retracement to go higher. We could sit on the side more so with the higher time frame, right? What the structure looks like. Clearly, it looks like it's still bullish. Down close candle supporting price, fair value gap supporting price. Potential bearish fair value gaps are turning to inversions. All the different PD arrays, volume imbalances, bearish order blocks, right? Or previous bearish order blocks. It's getting above them, using them as support, right? So inverting order blocks, fair value gaps, and breaking through highs, and just leaving lows available. Stop runs are leading to rallies, and in some cases it's failing to take swing lows after it's delivered into a PD array, and we've been going higher. Okay, there's a fractal high here, so the next 1 or 2 days after a fractal high forms on the higher time frame charts, weekly or daily, the next 2 or 1 to 2 candles after the third candle forms that creates the fractal can be expected to potentially push lower. This topic's important relative to some of the things that are on the indices, but I just wanted to touch on this real quick. So yeah, hopefully all that makes sense to you guys. All right, so now we'll go to the DXY. And like we said on Sunday, order flow has seemed to be favoring bullishness. There was no real reason to try to think that it was going to go lower. And we specifically highlighted this monthly high up here. And we can kind of see how it's reaching towards that level and it's not really stopping. So I don't think they're going to leave that available, right? I really do think that they're going to take this out, obviously. I mean, it looks pretty clear that that's what their intention is. Of course, last week we had this fair value gap that we were watching. Well, the last 2 weeks. And it respected it until it didn't, right? And then once it inverted that, showed that it was not interested, it's just been on a rampage going higher. The weekly chart supporting that as well. Down close candles supporting price. Down wicks are not really being closed below. Or up wicks that overlap these types of candles that are one-sided to the buy side. The bodies of the candles here that trade into them are respecting it. The wicks do the damage, and wicks are manipulation, and the bodies tell the story. So you can really clearly see that here. 50% held it, and it's just continued to rally. So we have really no reason to try to pick a top or assume that the DXY is going to tank. Maybe that happens at some point. I'm not behind that at the moment. So we're going to just keep looking for this to keep pushing higher until it hits a significant level. and then we may have to adjust, at least short term, because it may hit this and then reverse. And again, the whole market works together, right? So if one influential asset's doing something or hits an important level and then reverses, that's going to put the reverse effect on the other assets that are related to that asset, like the indices, for example, versus the DXY or the foreign currencies, right? So yeah, we've taken previous week's high, right? So you can kind of see the topic that I always talk about when we're starting a week. The most important levels are the previous candle's high and low, especially if you're on the daily or the weekly chart or the monthly chart. Because if price is going to run higher, it's going to have to break this level first, because that's just the way it is. The next candle, in order to go higher, has to break the previous candle's high, unless it consolidates or reverses. And we see neither of those taking place. It's just rapidly running. And we can see the open price here from Sunday. Notice how this candle wicked lower, tapped into it or touched the weekly open, also tapped into the new week opening gap. It's acted as support, very strong support, and it's just rapidly increased, reaching for this terminus being the monthly high. And I think we're going to continue to try to get up there. It is Tuesday. This has happened a little bit early in the week for it to just give like almost no manipulation other than this small retracement. I don't think that, given what we see here, that it's going to reach down below here until something significant happens, which could be taking out this high, right? And we may look to try to attempt once more, but overall the view is DXY is running higher, and we're not going to go against the waves that are being created by this run higher. Okay, and again, if we want this to be really confirmed to go higher significantly or add more probabilities, we want to see this area get broken if the DXY is going to in fact go higher. If this ends up tanking aggressively, then we could look at the DXY in a sense that like the future could lead to a decline once we hit a significant level like this high up here. Because again, the yields generally impact pretty aggressively what the DXY is going to do. So we always have to keep tabs on this and keep that in mind, especially when we're rallying aggressively or just going in one direction aggressively. The greatest confirmation, at least with the way I trade and what I've learned through ICT, is obviously watching, down close candle support price in this instance if we're going higher. But also in a trend, we want to see for the DXY, the yields rapidly repricing to the buy side, because that's the currencies of a country chase the yields of that country related to the interest rates. And I mean, that's just kind of the way it is. It's how the rates work in countries and, the impact it has. So, knowing that that's the case, I mean, it's kind of common sense that we would want to see this agree with the DXY, right? So hopefully that makes sense. Not too complicated. People can overcomplicate all this stuff, but I'm not looking to do that. I want you to be able to use this stuff and understand why it's important. So hopefully I've been able to achieve that, and we'll continue to do so. But yeah, so it's been pretty rapid overnight. If we take this down a little bit further, we do see that overnight London has just rapidly repriced. So let me hear it in the chat. What is the expectation going into AM session when we see a rapid London or rapid previous day's candle delivery? What is our opinion or just like default assumption when we go into the AM session looking at the indices or any other asset related to these? You guys tell me in the chat. Good morning, Carlos. Joan. George, good morning. Fotis, good morning. Byron, what's up, brother? Tyler, what's up? Tony, what's up? ATM, what's up? Okay, consolidation. Okay, consolidation. Yeah, so basically, yeah, exactly. That was the answer I was looking for. Fotis, high resistance, consolidation. High resistance, right? Low probability, Tyler, exactly. Right? Is that always the case? Not necessarily. Most of the time it is. Why? Because the excitement that's triggered by a fast overnight going into New York, it's at an all-time high, bullish or bearish. So what is the main operation that smart money's probably going to do? They're either going to slow things down, aka time distortion or consolidation, hold price before the next move, or reverse entirely to go against all of that before they want to run back in the same direction, if it's going to continue going in that direction, right? Of the London and previous day. Okay? So very important. So you don't go in there trying to gunsling and chase price. It's not necessary. Those of you that are with me in my private group, even those of you that only spend time with me here on YouTube, you guys know that there's a numerous amount of opportunities that we can pull from price. Yesterday, we had a pretty good day. Lots of opportunity. So yeah, I think there was like 5 opportunities, which is, 4 or 5 is generally what we're able to identify. Does that mean we take all of those trades? No, we pick 1 or 2 and that's it. And if there's more, that's great. Because if we miss moves, it just shows that we don't have to worry about missing moves. All right? So yeah, we have to be cautious with this. Again, I have a target up here being the monthly high, so that's where my attention will be. I wouldn't be surprised if they try to pull against all this stuff that's happened, just to set up a discount relative to where price is at currently, and maybe set something up a little bit later after the open, which is in 9 minutes. Okay, and in my private group, I think on Sunday too, I talked about this. There's this new week opening gap down here. When we were up here, we were monitoring that as a possibility because it's just been really rapid to the buy side. And so now we're even closer. We're even closer to those levels. My brother did mention, or we just all mentioned at the moment, that London was pretty quick, right? It was massive amount of delivery, at least for the DXY. London kind of went a little bit, right? It's kind of been a bit sideways, but we have seen the DXY rapidly reprice, which is very interesting. So we'll see kind of what price wants to do here. Let's go look at what the other indices did for night. So London here didn't really, I guess it kind of did displace pretty solidly. Yesterday was a large range day. So again, like I said, we're going into AM session thinking either reversal to continue going lower or consolidation until potentially PM session later today. Okay, so we'll have to obviously wait and see and get a feel for what price wants to do as we start the New York session. But that's kind of where our head's going to be this morning. Okay, we do got a gap in here. Okay, 1 hour. So I would really like to see us get up there, tap into this, and then maybe start another push lower. We do have this run lower, this run higher, failed to break that high, and then we've now smashed below it. So this is also going to be something potentially useful, because the run higher to the run lower that's now broken below this whole entire range should barely be touched into, if it wants to get touched into at all, if we're going to be bearish. Okay, and if we go to the higher time frame, just to kind of refer back to the fractal high idea, when a fractal forms, the next 1 to 2 candles after that can generally be looked at as a point of retracement, right? Retracement to do what? To go from a premium that left the fractal high to a discount PD array that could then potentially set up the next run higher if it's going to, in fact, do that. Could see that. Let me see real quick. So yeah, we could see how the Nasdaq has definitely tapped into the new week opening gap. So we went from the fractal high forming to price displacing and retracing basically to a logical PD array. The logical PD array is the large candle gap suspension block right here, right? this gap, pretty large gap in here, but there's a gap above, right? Volume imbalance, pretty much a volume imbalance in here. This is actually something that ICT refers to as a liquidity void. Okay, there's a difference between liquidity voids and fair value gaps. This is void of any liquidity whatsoever. You don't even see a wick coming into this. So that is highly inefficient. They don't like to leave that. And couple that with a fractal high, that makes sense of why this retraced so aggressively and why it came right into this level. There's still a little bit of that left, right, inside of the gap in here. Okay. So it's still not completely done. I don't necessarily think that we're done with this. If it is done and it leaves that, it's going to be kind of interesting. I don't really believe they're going to do that. DXY rallying higher supports, this continuing to drop. Again, it has been a bit aggressive just from the previous day going into London. You see how the fast pace ended up going into London and slowed the roll, slowed down. This is a beautiful example, right? If this was like the 5-minute chart and this whole delivery was London, we'd be looking at it the same way, right? But this is just a 1-hour chart. So again, our expectation has to be managed because of what we see, what price has given us. I talked about Friday's high and low, right? Just to mention this topic as well, liquidity-wise. When the week starts, Friday's high and Friday's low are the first pools of liquidity that are going to have to be taken. Regardless of what it's trying to do, one or the other, sometimes both, one for the opposing liquidity. I did want to see that happen yesterday, but it didn't do it. But we were able to get in line as it was, doing whatever it wanted to do. Asia definitely was really quick. So again, fast Asia, fast London generally can lead to a problem for the next session, which for us is AM session, right? So you don't just chase it because it's going lower, right? If it's going to go lower and we are going to come down to this void of liquidity down here, which is basically where price has zero trading whatsoever, like not even a wick. In order for that to be targeted, I personally am going to require us to get up above London's high here. Maybe sweep London's high, use it as counterparty liquidity, then set us up with something that can maybe attempt to try to get back down here. If DXY is going to keep going higher, that's what I want to potentially observe, and then we'll monitor what happens once we get back above this high that we talked about, which is it a quarterly high? Not even sure. Let me see. Is it a quarterly high? Yeah, it is. So you see this is a 3-month chart. So this is a quarterly high. So the current quarter, the whole objective has been to retrace after the last couple have been pretty aggressive bearish, and we got this gap in here. We got a low high, lower low breaker, okay, and an order block on this quarterly time frame. So that just kind of justifies when we hit this high, we got to really monitor the likelihood of a rejection on this really large time frame. But of course, we'll use this when we get to that point. If we get up there, I believe we will. So bullish DXY means it should lead to continued bearishness in the indices. But again, we have a requirement first. We're going to have to see price get up above this, tap into this, trigger in that liquidity because stops are there from overnight and previous day, and then see if we can't get price to reject from there. It may want to get back up into here. But in order for me to look to short again, right, I really want to see this take place. If it doesn't do that, great. We'll get in line with a continuation. Because if it fails to get up there, that shows the price is exceedingly interested, especially with strong bullish DXY. A failure to get up here would be indicating it's strongly interested in continuing to drop. So we could rely on order blocks that are created. They're just pricing in a short-term premium relative to where price is at as it makes its way to the downside. So that's kind of my overall overview opinion and how I'm going to operate today. All right, so does all that make sense? Let me know in the chat. Give me a 1 in the chat if it makes sense. And And don't forget to like the video, subscribe to the channel if you get value. It helps me reach more people, and you know, if you support what I do, it's free, right? So yeah, it's much appreciated. Okay, one for this one, George one. Okay, perfect. And yeah, if any of you guys have questions, if you're new here, or just, you know, want me to explain something further, just let me know. We did just hit 630, so let's observe what's going to happen here. See if we can't get price to get up above here. With DXY being so aggressive, it may not allow it. And if we break down below this low, we have a low, high, lower low, and we may actually see this turn into a bearish breaker to fill in the rest of this really, really early on, obviously. We got this fair value gap. Time frames, it's 10 minute, 15 minute. So yeah, let's see what happens. We have a massive regular trading hours gap. That kind of encourages the opinion that I just stated. First and foremost, we would like to see price get up here and test that a little bit. 384 points regular trading hours gap. This is a time when it becomes less likely, when it's that large, it's less likely to want to reach deeply into this, right? To try to get into the 50% that ICT talks about with the regular trading hours gap. Does it mean it won't do it or can't do it? No, obviously. Especially if things start to turn across the board, like DXY falls and stuff like that. But it's definitely something to keep in mind. Until we get some serious displacement, ideally, you know, getting up above this and closing above this fair value gap, that would be the only real like indication for me, especially if DXY drops, for us to want to really trust further amplified buy positions. In that case, right, if it does that, we could just look at this as a market maker buy model, right? And then we could just kind of go from there. But for now, especially with this void down here, they don't like to leave this. So I'm pretty confident that we will be able to get down there and take that first before any of that was even to take place, if it was to take place. Okay? So we'll just stick to what price has been doing. If we can get price to get up here, that's ideal, because then we'd purge that liquidity. We'd know that work has been done and equal highs aren't being left. And then if it was to displace and set something up to decline from there, also failing to get up into the 50% of the regular trading hours gap, staying below the open price, staying below the 630 open price, and the first presented for value gap, all of that stuff is an indication that will continue to drop. And it looks like we're going to be correct in this assumption, and we may fail to get up here, which just amplifies how bearish this market is at the moment. All right. Okay, let's go to the 15-minute chart. Let's look at this. This is a breaker. A little too early for my liking. I don't necessarily like to take trades right at 6:30. We may see this as an exception, right? It may actually deliver this early and refuse to get up here. Doesn't mean that it won't come up there later. But you could clearly see they're very interested in finishing this off, making this area efficient, because it's void of liquidity. There's not even a wick that trades in there, so this should be pretty rapid to get down there, if they do decide to get down there. So let's see if we can continue to get that. So DXY is not letting up. See if we can't get a return back into this level. And then of course we got London's low mixed with the liquidity void. That kind of sets the tone for this. Don't really see any S&T, so that's good. So let's see if this can hold price. See if it could stay down. This low to that high, if this breaker is going to be valid, the 50% should not be traded into. If it does, it makes it less likely that it's going to continue to drop, or that it makes it less likely that this is going to be trustworthy. All right, and then we would look to aim back at these highs up here. Again, I wouldn't be surprised if they drop, take this out, then turn around if that's what they're going to do, if they're going to actually turn. But honestly, I'd like to see this fulfilled first to even start considering that. And you know, if it doesn't, our attention would just come up here. If we start to invert all this, then we would act accordingly in that circumstance. But I'm pretty confident that we'll get down to here first and foremost. Yeah, I'm going to follow my rules today about not taking trades right at the open. Because again, we've been really rapid. It's good to have this very obvious target down here. So again, this may be a circumstance where it just right out the gate just shoots straight down, but you know, I think I'm just going to fold to my rules that I normally do, which is not engage right at the open. So let's watch this midpoint here. It is a new week opening gap. So again, it's going to be high resistance to try to get down here. So yeah, see the rules that I'm talking about? It's open, like right when it opens at 6:30, it's not ideal to try to engage. It's just not. Even if you have a logical, easy target or reasonable target that's really close, you know, it's just too volatile, and everybody overnight is trying to short, right? So that's why it's best to wait for something to maybe get up here first, right? Maybe it just uses this and then goes down, right? That could be an opportunity too, potentially, right? I'm not going to take that. Even if it does deliver from there, I'd prefer to wait given what we've seen previously. It's just, in my opinion, the safer bet. Let's watch this fair value gap. Let's see, is that going to hold, or are we going to invert that? Because if this gets, or not invert, but reclaimed, right? If it trades through that again and then reclaims it, this breaker's still intact, right? The high, or yeah, high, low, high, and then it breaks down below this, right? So bearish breaker. We got buy stops taken. If this is going to short from here, we have this wick, right? Should act as a balanced price range. Seems as though it has basically delivered in that way, right? Now it looks like we may be attempting to get back down below this, still supporting the breaker, right? Unless this is inverted, it's going to just keep going lower, right? But you can kind of see that executing right at the open, this pullback here could have scared somebody, maybe stopped them out. YouTube model rules, if you would have executed this run on stops, shift in market structure, the secondary fair value gap, your stop would have went up above here anyway. So you would have been safe in there. But again, like I said, I'm just going to submit to the rules that I always use. No executions within the first 20 to 30 minutes. Just let price print. You're not missing anything by doing that. And most of the time you will be missing something, which is more losses than is necessary. Losses that lead to you being correct on the day, but just getting stopped out early. Something in my eye. Oh. Let me see. Got any questions? Okay, no questions. All right. See, I'm still behind the idea that we're going to take out this low down here. This may end up being what ICT calls an algorithmic rebalance. Not going to get into detail exactly what that is, but just a small retracement that could lead to continued down delivery. So yeah, it's somewhat refusing to give a reaction here. We're kind of just stuck. It's to be expected after what we basically have come off of, right? Everyone's anticipating a fast move because it's been fast, and they're kind of, stalling out. To anyone that's trying to take a short, it's really, really testing them and or hurting them. So we're just gonna have to wait. I'm not interested in this. I want to see if we can get up here first, and then see what we can get. It's starting to look more and more like it is going to be interested in leaving this for now. Right, we've now turned this bearish fair value gap and the bearish breaker into an inversion now. So now we got a shift in market structure after a run on stops, inverted fair value gap. This right here, for those of you in my private group, I'm sure you guys can point out this scenario in terms of like the potential bullish run, aiming for London's high. Yeah, that inversion was pretty nice. Definitely was a deciding factor if this was going to hold or not, as far as what price is going to do next. And we could see that it's turning towards that initial London high target we'd like to see taken out first before a short took place. And then of course we monitored this breaker, right? The breaker did not hold up. And the rules that I talk about, not taking an execution too early, right at the open, saved a losing trade again, right? It happens over and over, how it saves bad decisions by just waiting, simply just waiting for the opening range. And those of you that have been watching ICT's Concepts for a couple years, the opening range should be something familiar to you, or at least you hopefully have heard it before. Yeah, see, we got this breaker that turned to an inversion, but now we got this breaker here as well for a bullish idea, aiming for London's high, and the 1 hour fair value gap up there. See, I think I'm going to want to wait to see if we can get a more meaningful run or a more meaningful move by us tapping into this higher time frame level. We see that we have the new week opening gap that's held price. Right, it's definitely held price up. Yeah, for sure, Nico. Yeah, I kind of was skeptical about it just because of all the fast-paced moves taking place. And I just definitely decided to just allow the rules not to take a trade so early, which is also well outside of a macro. And sometimes it works, right? You guys have seen in the private calls, in my private group, even here. Sometimes it does deliver right at 6:30, something nice to take part in. But a lot of times it won't. And it's all volatility injection and something that's being used to manipulate. I'm pretty confident that we'll get up to that London high. And then we'll see what it wants to do once it taps into that. Yeah, expect that today's going to be a bit sloppy. This looked pretty nice here, right? This little breaker. Simply just to aim at the London high here. We'll see if we can get that. If not, and it just comes back into the range, again, this is to be expected. That's going to be a harder to trade environment. It's not a day to push too aggressively. It's definitely a day to kind of wait and see kind of what it's going to do. Let the macros kick in. Let price open up a little bit. We got DXY turning pretty aggressively ahead of the monthly high being taken. Rapid bullish repricing for the DXY will lead to consolidation or reversal, right, before it starts to continue and reach that secondary level or that main level, that being the monthly high, right? And it's a day where there's no news, right? So again, low probability day. Expect high resistance. You couple that with a fast-paced London, fast-paced previous large range day, and it's just a recipe for today's price delivery to be a bit more shaky, less precise, and requires a lot more caution and discipline to not overtrade, over leverage, because you will pay the price. If not today, the next time, if this isn't considered, it could really, really result in something unnecessary. So I did execute this breaker in here just simply to target up there, aiming for 20 to 30 points. 20-point stop, right? Very small, mid portion of the breaker candle. So, we'll see. Is it going to take me out, or are we going to actually get up there, give us that 20 to 30 points, and allow us to secure that? And then we'll see what it wants to do around that time. If we fail to break that London high and it just displaces aggressively, obviously, like I said, it's that type of condition. When price looks like this, I'm going to execute every single time. If it didn't have a fast-paced London, this breaker here would have been something I would have executed. Maybe not if I'm submitting to the early 6:30 rules, right, or the New York Open rules. No executions within the first 30 minutes. Just wait for that first macro. Maybe then in that case I probably would have missed it if it would have delivered. But this is one that I definitely got behind right now. So we'll see. 20 points. See, it's looking like it may stop me out. Maybe I should have moved my stop to here. I don't move my stops, so we'll see. It is what it is if it stops me out. Yeah, stop is right there. Definitely getting close. Breakers should be balanced price ranges, so it should not dig very aggressively into the breaker. It should be able to hold if I'm correct. And then if it shifts above this high here, right, that'll be great, because then we'll have a change in the state of delivery after a stop run inside of a bullish PD array with a clear target above us and a pretty solid shift in market structure here. But yeah, we'll see. And all I'm really aiming for is this amount here. Oh, I guess we hit it. Wow, I didn't even know that. I didn't even realize that we hit 30 points already from that entry. Yeah, shoot, let's see if we can get 50. Okay, at this point, once we break this high, my stop's now at break even. We should have no real reason to get back down below that. It's the macro, so again, we want speed. Oh, that was close, huh? Sheesh. Really close. And if you notice, the execution that I mentioned was when price pulled back down into this. Right? So the down candle and a bullish run, that's what you generally want to execute on. You want to start getting comfortable with that. It takes time. You have to trust what you're doing. But ICT mentions that the best thing you can do for risk management is to enter when price pulls down into your opportunity, right? When it hits your PD array, when it sets your model up. If you're bullish, when price trades into the level you want to see reactive, you want to execute or place your limit around that level. So now we got a change in the state of delivery here again. So shift above this high. So we should be able to continue to see this hold in price. Assuming that this is going to be the leg that pushes price and we're not going to get one more push lower. Given the condition, fast London, fast previous day, you can't discount the fact that that could be the case. It could try once more and be very manipulated, very back and forth, very slow, high resistance, right? This is the type of condition that enables that to take place. Let's see. If we hit 50, I'm going to move my stop up to here and see if we can't get it to really accelerate and get us above that. Maybe even get to that 1 hour fair value gap. That'd be pretty nice. We'll see how I feel. Let's start with this first. Start with that first. Okay, so London's high has now been... So right there I would take profit. Okay? Just right when it hits that or comes close to it. Generally, right? Let's see if we can push it a little further. Move my stop to 30 points. Okay, let's see. Can we get up to that level? So that 1 hour fair value gap looks pretty tasty to me. And there it is. Take profit right there. Oh, if I can get to it quick enough. There we go. 66 points. Not bad. Not bad. But yeah. And there it is, full terminus. So any type of loss that may have been encountered if you did get, maybe overzealous and execute in here, and you maybe took a loss, all of that was recouped here. And those of you in my private group that understand the model, the Razor model specific to our community, you know that this was also part of that as well. So you had one earlier opportunity. Then you also had the secondary opportunity for those of you that like the breaker. Either one was nice. All right, we did want to see us potentially get down here first, then see price run up potentially. But now it seems like we left that low, and we may be sweeping in or hitting this fair value gap in here, this 1 hour fair value gap, to then potentially get us down below to that void if DXY picks up and get some legs back under it. See what happens in here. It's not really reacting to this 1 hour fair value gap yet. It's pretty interesting. Let's see, those of you in my private group, is this going to be a time I should have held? I'm just looking at it right now. Maybe I should have held a little bit more, huh? I think that's enough. Anything above 30 points is enough. But yeah, yet again, we've hopped on. Oh snap, my camera's all sideways, huh? I don't know why that damn thing keeps moving. Not sure why it's still moving. But yeah, like I said, yet again, day after day, week after week. I'm not one to toot my own horn, but nobody's doing it like this. There's a handful of people that I could say are. Jade Cap being one of them, Trader Kane being one of them. Who else? The Market Maker Model Trader, he's one of them. Who else? The ones that prove it, that are actually live, either publicly or privately. There's no one doing it like this. You know what I mean? And it's to the point where there's so much proof here on this channel, even though we're small, because I don't give signals and I'm not a signal junkie creator. I'm not trying to get people tethered to me forever. I want to build independent traders. Because that's the case, it's probably why it's small, and some people, feel like they're not getting what they want, which, boo-hoo. Okay. But those of you that have been here for a while, some of my private group students are in the chat right now. You guys know that what I'm saying right now is absolutely facts. And some of you guys are also, like Byron in the chat, one of the greatest people in my community. Someone that has a lot of wisdom, who's been with me since the start. Nico's one of them too, right? Nico's a really good student in the private group. George, up and coming savage. Joan, and many others. You know what I mean? You guys see this on a daily basis. It's not ICT doing it. It's not some magic power. Kind of feels like it is though. We're like wizards, like market go here and it goes there, right? It goes where we say it's going to go. But the proof is pretty insane. This year, the proof of this page, this channel, the skill set that I'm showcasing, it's absolutely undeniable. And again, I know that it's hard to trust people in this industry. That's why I'm even mentioning this. But you can trust and believe that if you spend time here, you're not going to ever trade the same. And you have nothing. There's going to be no doubts that what we do here is impeccable. And it's just, as you learn and borrow some of my experience, continue with your ICT studies, you'll eventually see that it's undeniable for you too. You just have to wrangle that personal world, that inner conversation that you have with yourself, and any of the flaws that you have personally, those are going to be the barriers, not the technicals. There's people like me out here literally giving this stuff on a silver platter how to do this. I try my best to teach more simple than ICT teaches. And I feel like I've done a good job based on the testimonials, which I have hundreds of, in terms of, students coming to me for help and leaving more confident than they ever imagined they would be confident, right? Like a higher level of confidence that's just unnormal, right, in this industry. Irrational, yet rational confidence. Because hedge funds aren't even able to do this. They can't trade on a lower time frame. Some of the best can't hit at a hit rate that we have proven, that I've proven. I passed a funded account this year in Top Step as a challenge, right? Like just a showcase thing, like a case study. And I finished the funded account, which is all documented in the private group and in the free group. I mentioned it. We had an 86% strike rate. Like who's doing that? Aside from ICT himself. Some of the traders I mentioned earlier, they're not hitting at an 86% strike rate. And again, I'm not one to toot my own horn, but it's like, this industry is hard to trust people in. And when someone's out here doing things the way that I'm doing, that allows for the time to be available, because the traders that I mentioned don't allow their time to really be available. They just throw you a course. Well, maybe not so much Jade Cap and Trader Kane, and the market maker trader. They're really good people, and they physically show you they know what they're doing. By live calls, day-to-day, sessions. Sorry for the stupid train if you guys hear that. They always want to come around when I'm live. But it's hard to trust people in this industry, and I'm not the kind of trader that's going, look at that beautiful, just continued move. See the lack of response from this? I mean, that's just absolutely amazing to see. But like I was saying, I'm not one. At first, I was showing profits and look at my MT4 and, look at this $5,000, $10,000, $2,000 profit I was making. But I realized that it attracts the wrong people, and I want to be able to attract everyone, obviously, because that means I can help them. And by default, I'll be able to have the impact I'm trying to have on in terms of passing the blessing along. but it's a headache. It's a lot of work to be a mentor. If you really care, and if you offer one-on-ones like I do, like access like that. So, not everyone not everyone is going to like the things that we do. It's going to be the same for you if you try to do this type of stuff. But the way that I do stuff, by making the chart speak, by my students speaking for the experience they've had, I think that does more than enough in terms of honest descriptions of what's happening here and what we do. It kind of shows you physically what the product is, versus being pulled into pocket watching, which is what most influencers want to do, because that's what markets things properly, right? But when someone comes to me, I try to pull you away from the money itself, because doing this stuff correctly, having the process mastered and really love the process, like when you fall in love with that process, eventually, by default, we're trying to make money, right? And this is in no way a guarantee that you will make money by coming to me. There's no guarantee, because you have to take the trades. I do things like this where I call opportunities out or point to things, and you make your own decisions. But that's the key. You make your own decisions, and you take what I'm teaching and pointing you to as a conduit, like ICT calls himself, a conduit, right? Get people to be connected to the stuff that he's teaching, and help you along the way. I try to be that more so than the trader out here that's being flamboyant. I really have no interest in people caring about my financial well-being, because you can't spend my money. Just like how I can't spend your money. I can't spend ICT's money or any of these other traders' money. So, and just because they make 10, 20,000, 40,000, a million, right? Just because they make that amount doesn't mean by default you're going to come out the gates doing that within a year, within 6 months, within 3 months, within 3 years. It's all up to you, because the tools are only as good as the operator using them. And if the operator's a mess and is doing things too quickly, has a bad mindset, and goals are focused solely on things that are toxic to them learning, the tools are going to be kind of useless. But the ones that apply themselves, that are willing to listen to some of these types of conversations about psychology, about the things that are really important, like the process. Oh my God, this stupid thing. I don't know why this thing keeps moving. Yeah, the ones that are focused on the process are the ones that really, really thrive in an environment like I've created, like many, well, not many, but some create, that aren't focused on materialism. It's great, right? Money's great. I don't have nothing against it, obviously, or even just having goals and things that you're striving for. There's nothing wrong with that. But you got to cross one bridge before you get to that. That one bridge is mastering the process, mastering yourself. And I hope that, you guys have spent time with me. I know you guys in my private group. I make it a point to make sure that you know what I'm focused on and what you need to be focused on, because I'm obligated due to you investing in me, which I'm very appreciative of, because you could be with anyone else. But you chose to be here on this small community with this random dude in California that literally just comes out here showing you where the market's going to go, and doesn't sell you a dream. It doesn't do all that, flashy marketing. So I greatly appreciate you guys. I try to tell you guys as much as possible, and I hope you guys know that. And those of you here in the YouTube family, I hope that you guys also have been getting a lot of value. I know students like Tony, absolutely spectacular YouTube student, absolutely phenomenal. We've got to give you your flowers, brother. Just passing funded accounts left and right. Just the process of passing a funded account put you in the, small minority of people in this industry, because it's harder to be a prop firm trader than it is to be just a normal trader, relative to, all the rules and stuff, because they intentionally make it hard for you, for all of us. And it's going to really highlight whether you have the mindset at the moment to be able to do something like that, and manage something like that. Because you set the rules when you're trading a personal account. Doesn't mean you act reckless, right? It just means that there's a little more flexibility. If you do go into drawdown, it's, it could be a bigger drawdown than 10% if you're risking a little bit more. But prop firms have their place. Your goal should always be to, if you're going to make money in prop firms, you want to make money to invest in a personal account, a brokerage account, or a retirement account that's tax deferred if you're in the U.S., or something that you have full control over. But even then, if something happens to the prop firm, but you were not focused on the money only, and you focus on the process, and you've given yourself this skill set by studying and being around the right people, even if it's all taken away from you and you had $0 and you had nothing to do, like nothing you could possibly trade with, because all the opportunity was taken from you for, whatever reason, you could still get back on the horse and build it up because you have the skill set forever. So again, it's important to focus on the skill set. Money can always be made back. The skill set, the mindset, how to view this as a business and a professional, like that stuff it's priceless. It's absolutely priceless. So that, you want to focus there. You really, really want to focus there. Right, and so yeah, let me see. You taught me what was inside myself. Nice. That's awesome to hear, brother. That's awesome. I appreciate that. I definitely trust the process for sure. And you guys are here with a person that knows what he's talking about, and you don't even got to take my word for it. Just go watch the videos. Watch what we do every day. I'm not perfect. I never claimed to be perfect. I'm probably not the best trader. I am very effective, though. That's for sure. Consistent, effective, manage my risk well. Haven't blown an account in like 3.5 years. Right? And the last account that I did blow was because I was being reckless trying to flip an account. It wasn't even like a normal scenario. I was trying to do extra, right? And it was in no way money I wasn't willing to lose. So yeah. Let me see. I always knew once I really learned I could change my life, my reality. Best shape of my life too, daily workouts. 50 looking like nothing. Yeah, it's amazing, Tony. I talked to my private group yesterday about the vast age parameters. I have students that are 17, 3 students that are 17, not even out of high school yet. I have numerous 20-year-olds. I have some students that are in their 40s, 50s. I have 2 students that are literally above 60 years old. So it just tells you there's no too late, okay? Especially if you're in a community like this. Like, it's not going to take you 5 years to learn. It's just not. It's just not. What may take a little bit longer for some, what may vary, is obviously the discipline, right? Because I can't give you that. I can't give you the trust that I have behind the ideas and concepts that I use within ICT's concepts. That's stuff that I cannot give you. That is the part of the journey you have to walk on your own. And that's what makes this hard. It's not the technicals. The technicals, you can learn those in a year. ICT's even admitted that. You can find a model and set up a whole framework around what you're going to do as a trader in a year. Obviously, the longer you do it, the more trust you'll have, right? But trust is built over time, just like a relationship, And discipline is built, personally. I could tell you all the rules in the world. I could show you this and show you that and do all these crazy things, and get you guys, really locked in, at least knowing what to do. But, it's up to you to apply this stuff. Like I could say 1 to 2 trades a day, right? Sounds great. The why protects you, right? Why is that important? Because it protects your mental capital, physical capital. More opportunity doesn't mean, or more executions doesn't mean more opportunity. It means more risk. Right? I could tell you guys all these things. Tell you the why, do all that. But when you're in the heat of the moment and cortisol, the stress hormone, is piercing through your bloodstream, the excitement, adrenaline, sometimes, a lot of times, that's going to fog your judgment of what's important and what you should be doing. And what you need to be doing, what works, right? You'll go completely against that when these things are going on if you're not mentally focused on disciplining yourself. Telling yourself, this is what I had to tell myself, because I started trading because of my daughter, and I wanted to make sure that I was going to end up doing something where I would have time to be able to be around her whenever I wanted to. Obviously, things got complicated with me and her mom. So even though I'm trading and have a lot of free time, I still can't, I still can't accomplish that goal, unfortunately, at least for now. But so I started trading to be able to, be with her. And when it came to the first 2 years, when I look back on it and reflect, I was more focused on how I felt, what I wanted to do, what I felt that I needed to do, and which was learn faster, get to things faster, because of my own selfish reasons, and it was not a fun experience. I'll tell you that right now. Looking back on it, I'm grateful because I was able to overcome. But, when it comes to discipline and the things that you need to do, the things that are really meaningful, that make it so you can have the opportunity to succeed, you want to attach your why. It needs to be vitally, vitally important. Like, you cannot live without this thing. And because of this thing, you have to succeed and do the things you're supposed to do as a trader. Like risk management. I had a piece of paper on my wall for a long time. It's still on my desk, but it's just a picture of my daughter saying, remember, every time you break your rules, you're telling your daughter that you really don't care about success, that you really don't care about succeeding and doing these things that you're really wanting to do. Just remember, And so every time I overtraded and overleveraged, I made a mistake like that, knowing what the consequence will be, which is failure, it would remind me that I'm basically telling my child I could care less because of what I feel, what I want to do right now, my impatience, my lack of discipline. So, I mean, you can imagine that that'll stop pretty much a majority of people from doing these stupid things. If you have something that meaningful attached to the reason you need to be disciplined and follow the rules, right? And do these things in a professional manner, right? That's what helped me. Still helps me every single day because, that little bug is always there. Oh, well, that wasn't enough. 30 points wasn't enough. 60 points wasn't enough. 100 points. Okay, well, it went 200 points. Well, it doesn't feel like it's enough. It is enough. You know why? Because we have to be disciplined. And we're not guaranteed that the next trade is going to be successful. We're not guaranteed that it's going to run 150 points. We're not guaranteed it's going to run 30 points. Because we could be wrong and it may turn around on us. And if we don't have the discipline to pause in those times, if we don't have reasons that are outside of ourselves, that are stronger than ourselves, to follow the rules and do the things that, the professionals always talk about. If we don't have something stopping us from ourselves and making these, quite frankly, selfish decisions because of how we feel. I mean, the default result for someone that does not look at this stuff as important, like discipline and following your rules and setting limits, the default result is failure. Nobody that succeeds in trading is a reckless, overtrading gambler that just trades anything and everything, always tries to get the most out of the move, like the maximum target, otherwise they'll let it come back to drawdown. Right? Like none of the successful traders out here do that. There's a handful of them that trade retail logic, normal, traditional. I mean, we're retail traders, right? But we're much different, a very different culture of retail trading. So other than the handful of people that do get away with this, most people don't, okay? And they're going to be met with failure. If you go read the the Market Wizards books, none of those people talk about them overtrading and over leveraging still. There's times when you could push and maybe it feels like you're overtrading. Like instead of 1%, you're risking 2% on a trade that's super, super likely to run. Like with this situation here, this would have been a time when I would have been really comfortable with increasing my risk instead of trying to capture 1.5%. I could have put much larger size than I did, right? Instead of 5 contracts, right? Which is not even a full mini, right? Simply because that's also because it's NFP week. I could have put way more because I was pretty confident we were going to get up here. We identified this ahead of it doing this at all, before this even manifested. We looked at this or visualized this, and it did exactly what we wanted. Right, or targeted exactly what we wanted. Of course, it kind of messed around in here at 6:30, right? Didn't really get down to this level first, but regardless, whether it got down here first or didn't, we knew what we were looking for to really get behind a potential short if it comes later on. Right? Maybe it doesn't come. Maybe the shorts don't come. Right? But we kind of knew this ahead of time. Right? So again, I just want to go back and reiterate. If you have been struggling with discipline, right, and over trading and over leveraging, and you're hurting yourself continuously, you want to evaluate why you started doing this. And is that why truly important? Is it only about money? Or is it about bigger things like taking care of your family? Maybe having something that you could pass on to cousins, uncles, family, brother, sister, friends, other people, right? Is it impact? Right? What is it? Is it to do something, charity related? Watch out for your community, right? What can you place on your need to be disciplined and follow these rules and make the improvements you have to make? That's more meaningful than just money, about yourself and you buying this or buying that. Because if it's about money, you're going to never be satisfied. If it's only about money, because that's part of it, obviously. Why the hell are we trading? Like, we're not just looking at charts for no reason. We're trying to make money, right? So it doesn't even have to really be mentioned, because that's just a default of what we're doing, right? But if you don't have something that's larger than yourself, I really encourage you guys to find that, because you'll let yourself down a lot easier than you will let someone else down that you care about, or other people that you care about, or a cause that's bigger than yourself. So I want to make sure that I remind you guys of that. Because that's what's going to keep you through. And plus, having faith, having some kind of faith, Of course, I recommend Christianity because, Jesus is king. But, whatever your faith is, be very, very deep inside of that. Okay? Because this is a rough industry to succeed in, you guys. It really is. I'm not going to sugarcoat it. It's very hard. And it's not hard simply because of the technicals. It's hard because of us. It was hard for me at first because of how I grew up. I had so many things I had to reshape and restructure the people I was around. I had to cut numerous people off. My friend group is tinier than it's ever been before. And it's better that way. Because you can't have these drains on your psyche. People that are negative, saying, "Oh, well, why are you doing that? It's gambling. Nobody could succeed." Them projecting their lack of confidence in themselves onto you, or jealousy or whatever. You want to make sure that stuff's out of here. I had to do that. Whatever you have to adjust in your life, you need to be okay with that so you can become the person that this industry requires you to be successful. Success leaves clues. The habits of successful people, the things they're willing to not or unwilling to tolerate, right? The things that you may have to do, like Tony said earlier, he's in the best shape of his life. Are you out of shape? Are you not eating properly? You're eating a bunch of junk food and candy bars all day, making you feel like crap, right? Are you drinking, smoking too much, right? Is it fogging your ability to focus? Is it interrupting you? There's nothing, wrong with doing that stuff here and there. But you have to make sure you're paying close attention to this type of stuff. Because that stuff can impact you, things outside of trading. Just like, the why. You want to make sure that's rooted in something you can't live without. Something that's that dramatic. Because the next time you try to overtrade and overleverage, you won't do it. Next time you try to trade outside of your session, you're not going to do it. Next time you try to trade a model that's not the model you've been trying to study, you're not going to do it. Until, of course, you add that to your arsenal, your weapons, right? Like you add it to your machine gun belt, right? Just add a little bit more ammo, right? But again, that takes time. Let me see. Fancy Pilot said, "Love the channel and since up." I appreciate you saying that, brother. Welcome. If you're new, this page, this channel is not like most. There's some that I vouch for, which I talk about here and there. Got to give flowers where they're due, right? If someone's doing spectacular, you want to, make sure you encourage them, because the industry needs more good people, like all of you. So I appreciate the love. Appreciate you, Fancy. And Tony says the ultimate sacrifice need for success doesn't come without sacrifice. It also doesn't come from laziness. Doesn't come from someone being irresponsible. Doesn't come from unrealistic expectations. When you're at first base and you're trying to get to home base, you have to cross through the other bases first. So there's bridges that you have to cross before you can hit certain milestones. We have to accept that and cherish the lessons that you learn on the way, and really, really pay attention to the lessons that are offered. Each losing trade, each winning trade, more so the losing trade, has such a lesson to learn, both technically, if you did it wrong, and psychologically, how you're speaking to yourself. It's extremely important stuff. Okay. It's very important to utilize those blessings, because every loss is a blessing. And if you don't look at it as, in any other way to justify this, you need to lose trades and go into drawdown to learn how you're going to get out of drawdown. Okay? You don't learn that skill set until you go through it and get out of it numerous times, because that's something in the job description as a money manager, because that's what a trader is. It's not a trader and that's it. You're managing money. So when you manage money, you got to manage risk, right? But yeah, it's, stuff is just, it's way deeper than what most people think, right? And, like I said a second ago, the way you talk to yourself, the way you deal with losses, the world that you create inside your head, you got to really, really cultivate that in the best way possible. And, if that means, unfollowing negative people, unfollowing negative content, detaching from negative people or content that may be entertaining and something comfortable for you to look at or be around, sometimes that stuff has to be removed, because you are what you consume when it comes to content a lot of times, because it's like a software program, just like how the people you're around, you become the average of the 5 people you hang around. The content that you watch the most, whether you want to believe it or not, whether I wanted to believe it or not, it was conditioning me to think a certain type of way, to be a certain type of way. It's like a program. Every time you watch something that's engaging, it's like a program, a software being downloaded to your mind. It may not be big at first, but do things enough. Do it over and over and over and over. Watch someone negative over and over and over and over and over and over and over. Absorb this nasty content over and over and over. Stuff that's super negative, that makes you feel like crap, that's just toxic, and you'll be surprised. Even if you don't notice it, it'll be having an effect on you as, who you are. It may make you start talking down to yourself, which, again, you may not notice it unless you focus on those elements. I had to focus and write down every single negative thought that I had in a day for 2 months to really figure out how negative I viewed the world, which was impacting my trading. ICT talked about this drill. I've mentioned it before, where you just take a piece of paper and you tally every single negative thought, every positive thought, and see which one outweighs which one, right? Does the positive stuff outweigh or the negative stuff outweigh? And if you lack confidence, self-image, and you can identify that you're overwhelmingly thinking about negative things all day, you can see that you need to change your thinking. And you can do that by looking at the content you watch, who you listen to. Is there family members that are negative, right? Is there somebody influencing you to be that way? And you'd be very surprised at how much better your life becomes, even if your life isn't where you want it to be at the moment. You'd be very surprised at the psychological change that takes place, the level of happiness you end up still having even more than ever, just by simply pruning things that you may not have known were having a pretty heavy effect on you, whether it's content, people, doesn't matter what it is. Every experience is put into your mind, in your memory bank, okay? And things that you spend a lot of time on, again, whether you want to believe it or not, it becomes a part of you. And, if we look hard enough, if we focus hard enough on identifying these things, you will see this type of stuff scattered all throughout your mindset. You got to do some housekeeping on your mental world, because it's very important that the person you see in the mirror is trustworthy to you, is positive, is a good coach, your best number one supporter. Because anyone you tell about this, anyone you tell that maybe has done this before or maybe doesn't know anything about it, they're either going to be jealous or they're going to be negative, right? And tell you that you're a gambler, never going to work, blah, blah, blah. Because I'm probably projecting, especially if they started doing this and can't do it, they'll project it onto you. The fact that they can't do it, So it's very important that you watch who you keep around, watch how you talk to yourself, watch the content you listen to. It's very important to attach, like I said, something you can't live without to the reason why you need to be disciplined. And also you can add it to this, right? Add that to the reason why you need to focus on this mental game. you know, because it's that important. But yeah, this run here was absolutely gorgeous. I don't really think there's much more to point out. I will talk about some stuff in here. I wish I could have you guys draw on the screen like I do on Zoom with my private group, because then you guys can it could be a little more engaging. But yeah, let's just say, well, before I move on, hopefully what we just talked about is of value to you. It's very important stuff. Some of the stuff that I talk about regularly, all the time, for a reason. Most of the neglected things that traders neglect on their way to profitability, success, improvement, you know, and being ambitious. You know, you get kind of blinded by things and forget some of the stuff along the way that's more important than the technicals and finding opportunity. But yeah, so hopefully you guys got value from what we talked about so far and some of the stuff I just went over. But let's just say we missed all this run. Okay, let's just assume, hypothetically, that we feel that price is going to continue to rally up and go higher. All right, how would you get in? How would you consider getting back into a trade if you assumed that we're going to rapidly continue to reprice higher? Right? Well, every single model that we learn from ICT's Concepts, you guys that have been with me for a while know I've talked about this before, continuation variations of the models. If price is expanding like this, you don't want to chase price by just entering because you see a bullish candle happening. Okay, or bullish candles happening. Let's actually look at how big that was. It was 145 points from entry. And of course this one failed. But when you look to get back into a trade that you're confident is going to keep moving, you want to look for, first of all, opposing PD arrays. Because opposing PD arrays will give you, it'll basically give you the like area and price that you can reasonably expect some type of pause or retracement or like a speed bump. Okay, so when price is accelerating like this aggressively and you're looking to try to get in, right, you notice how this 1 hour fair value gap was literally the area that triggered in the retracement. Counter trend, overall, you know, perspective, I guess you could say, right? The run higher, bullishness, hit a bearish PD array, and it ended up stalling out, retracing, whatever, right? So this is a good example of what I'm talking about opposing PD arrays when price is moving in one direction or the other. In this case, bullish, hit a bearish PD array that resulted in a retracement. But again, let's just say all this happened already, right? You're looking to try to participate again in a bullish run because you're assuming hypothetically it's going to get up here maybe, right? Or whatever the case may be. Well, depending on the model you use, you want to make sure you've mastered the sequence of events that takes place to create your model, okay? Because all throughout a price leg on these lower time frame charts, it continuously offers different models all throughout the price delivery that's taking place. Okay? So with this being bullish, hidden opposing PD array, we saw a retracement. Okay, great. Right? If we move up in time frame, we can kind of see what it reached into. So we hit this opposing PD array, it triggered a retracement, and that retracement did what? It came from the high down to the fair value gap. So once price gets now back into a fair value gap like this, after it's been so rapidly repricing, this is a pretty significant level. And if we're going to continue to go higher, ideally we'd like to see this hold, right? I'm sure you guys, or I hope you guys would agree, right? If we're expecting it to get up here. Once price gives us that retracement and we've mapped it out, right? And we reach into that level that could reasonably be seen to push price or continue to push price. If you want to drop down to like the 1 minute chart, Let's go with the 30-second chart actually, because this is a better example. You can start to see, right? If you think of the YouTube model, let's use this as an example, but this can be used for every model. Okay, it just depends on what model you're using, and you just have to go in there and look for that model to be showing the sequence of events that leads to it, right? But if you're trying to get in line with another move, right, as price is printing, you want to then go in and observe where the rules are kicking into place again that would support price continuing in the direction you're looking to see price go in. Okay? In this case, if we're thinking of the YouTube model, we have a higher time frame level relative to this 1 minute, or relative to the seconds chart, being the 5-minute fair value gap. I'll just color it yellow. All right. So we got a PD array that could launch price from a larger time frame basis relative to this entry time frame. And we see that there's a delivery and it's holding. And then we drop down to the seconds chart. Hypothetically, let's assume that this played out all the way up here. Right? Let's just say that. Well, we got a stop raid here, right? It's not a liquidity a sweep, right? It's a raid, right? It's a triggering in of opposing side. I guess you could call it a sweep. But seems like most of the people that say sweep, they don't know what they're talking about, right? Because the stuff that comes after that liquidity sweep comment generally is nonsensical. In some cases, it's not. I've heard so much nonsense from so many idiots on social media. Some of these words just irritate the crap out of me. But after this stop raid here, right, it pulls them in. We have a logical PD array that's in line with the higher time frame trend. Maybe we missed all this from earlier. Well, now once you see this type of setup take place and you have a level that has not been fully fulfilled, and that's your draw on liquidity, you start to map out the rules on whatever time frame you're trying to execute on. For the YouTube model, we see a run on stops. Right, we see a shift in market structure. Shift in market structure here, right? This is the leg that swept the sell side. Not this one. Right, you can consider that. But I've noticed over the ridiculous amount of studying I've done over the last, 6 years, well, 5 years, since I was trading with ICT Concepts. This run above this high here is much more important than this one, right? You can, if they're close like that, obviously it's kind of semantics, I guess. But you always want to get the one that's taking the stops, okay? The one that's on that leg, not this one, because look, it failed here, right? But again, because it's so close, you can use that. But once this type of stuff happens, stop raid, shift in market structure, and a fair value gap is left behind, look at how beautifully it held in there and then continued and offered another opportunity for the YouTube model in the form of a continuation. So let's say you missed that one, right? How can you set up again even further? Well, this is, for those of you that haven't seen me talk about this is going to open up a world that's so much more plentiful than you've ever even thought. If you're comfortable, obviously, using these lower time frames. Same thing happens on the higher time frames too. You just have to wait. But these lower time frames have a special, I guess, ability, right? Just to open things up a little bit more. But you see this here, and this right here was an execution for the YouTube model, right? The first one. The first continuation after all of this took place. We can actually make an argument down here. So I guess this is like the second one, right? Let's just point this out here so I don't pull you guys all over, right? But you see that there, and then you see another shift in market structure, right? This high took the stops, and then we rapidly repriced above. So here's another YouTube model entry there. Right? Of course, you want to make sure you're viewing things on a higher time frame. The farther along you go, the lower your risk has to be because of the risk of something like this happening. Doesn't upset the grand scheme of things, right? The overall narrative, but the deeper you get into a premium relative to the swing point that you're trading on, or the price leg you're trading within, the more likely it is that it's going to retrace a little bit, because it has to come and sweep lows to repair smart money buy positions with willing losers or stop losses, because there has to be a winner and a loser. So every time it retraces, it's seeking inefficiency or stops, right? Every time it expands, it's seeking inefficiencies or stops, right? Like this, it's reaching for what? Inefficiency. What did it do once it hit that? It seeks stops for retracement. And then once it hit the stops, what did it do? It went from inefficiencies and stops back to stops up above this high. And we kind of stalled out because it's been aggressive. But I hope you guys can see this continuation perspective. You frame stuff, again, if you miss a move, you frame stuff from a reasonable time frame, so you can have a little bit more of a upper time frame perspective. And then you go down to these lower time frames if you trade the second chart. If not, you just use a 1 minute. Okay, and then see what opportunities can further arise from that relative time frame. But use this same logic. Where are the rules happening again? Stop hunt at a logical level that we can expect a response from. And then once it creates that, okay, there's one move. Let's see, as price is printing again, what do? We look for the rules to kick in again. Stop hunt, stop raid, shift in market structure, fair value gap. Right, execution. Did it happen here? No. Is there a way to execute this? Yes. But we're not talking about that right now. Let's keep our focus here, okay? So now we can kind of see we may be having the same thing unfold in here. We got the lows here. It's kind of set equal lows. I'm just kind of trying to break down the logic of what I'm talking about. I'm not saying that this is something you should execute. Not every single one of these, is, when you see them, is going to be something worth executing. It's just showing you the logic and how to think about each model in terms of a continuation, and how that can open up a new world for you in terms of how much is really actually available for you to engage. Right? But look, you could see this was a stop hunt, kind of shallow. But what happened? Shift in market structure, fair value gap, execution. And you see it continuing. The sequence of events taking place that leads to the YouTube model. And every other model, they can all be looked at in this way. I can point out a couple different models just in this little price delivery in here, but I'm not going to tug you guys in too many directions. I hope that this makes sense. And then, of course, right, we take this same logic. Let's move down to here. Price got up above. It hit the breaker on that upper time frame. That's a PD array. It's also an entry model. It's the one that I utilized this morning to execute. Almost got stopped out, but my line in the sand was a 50% of the breaker candle, and you could see how perfect that was and why you can trust it. If you're correct, you're going to be correct. And if you get stopped out, so be it. Who cares? Right? But yeah, coming back to this example here, if you're trading the YouTube model, you see run on stops inside of a larger framework, at least a 5 minute, 15 minute. We traded into that, and then we displaced, shifting up above this high here, the one that created the stop run. All right? Price got above, and then it set the fair value gap. All right? Once it got above, hit the fair value gap again, bang. So if this one would have been missed, and you had a logical target, if this one would have been missed, or whatever, could have been the case down here, not really much to really consider down here. If you had turtle soup, I'm sure there's like an SMT down there or something. Yeah, SMT at the lows. And I believe it hit the new week opening gap and rallied. There it is. Okay. But yeah, so then you see another opportunity in here. Because I do want to mention that this is one of a few different concepts. ICT has never taught this. He's never taught the continuation variation of all of his models. He's never mentioned it because why? It's just too good. It's so amazing. Hopefully you guys can see how amazing this is. This is in no way an encouragement for you to go and just chase every single pattern you see. Again, like I've highlighted and mentioned, you want to make sure that when you are trying to catch this stuff, there's a logical reason, like a fair value gap or an order block or something that's above the execution time frame that price is trading down into, that's also supported by the higher time frame. That context is extremely important. That's a way that you can also filter moves that are unfolding. But again, the main point here is I want to make sure you guys are paying attention to the fact that there's not just one move that's unfolding, and if you miss it, you can't get another opportunity. If that's what you believe, then that's what's going to be true. But the reality of the matter is things are happening on numerous occasions, over and over. Here's one YouTube model. I was going to try to mention that the possible reversal, right, like retracement, may have also had one, but you don't see any fair value gaps in there that have been left open except this one, but that was not worth it. And it already hit a PD array in here. So one down here, we got the breaker too, right? So that's another model, kind of inside of this one. We got basically 3 executions, 4 executions, and a 5th execution opportunity in here. Where in this price action would you have felt the most comfortable? And where in this price action did you have the most context that you could have layered to make that execution make sense? Those are questions you need to ask yourself. And those of you that maybe haven't learned this before, I talk about this all the time in my private group, just one of many things that we talk about in great detail that is absolutely unrivaled. And the reason why we always have something to do, right? But if you guys haven't thought about this, I hope you see the power in what it is that I'm sharing here. Again, it's one of many different things similar to this. Very simple to understand, but they're beyond measure in terms of how powerful they are, how liberating it is to help you not feel like you're missing a move all the time and you can't get in. You can. You got to believe that you can and study stuff like this. You know, just remember the context. And again, you have more than enough opportunities in a 2 to 3 hour window and one session. You don't need to trade every single session. You know, pick the one that works for you, and you can use this type of logic, you know, relative to that time frame or that session. You know, and like I mentioned earlier, those of you in my private group, you know what this is. So 1, 2, 3, 4, 5, 6 opportunities. You know, and you know, generally this is what it looks like in my private group. Right, just numerous occasions. But yeah, hopefully again this made sense. Hopefully this is helpful for those of you in my YouTube family. Hopefully today has been valuable. Let me know in the chat if you guys think that everything made sense. If you guys learned something new here today, definitely let me know that as well and what that is. And if you got questions, just let me know, and we'll kind of let the next 30 minutes be more solely focused on you guys and your opinions or questions or whatnot. Yeah, DXY looks like it's kind of having a hard time here also. Looks like it's given a little bit of a rejection here. Remember what I said earlier too? I said that if this is going to be so bullish overnight, it's pretty highly likely that we'll see this turn around before we get up here. It looks like we were correct on that assumption as well. Which again, fully supported the fact that the indices were going to give ourselves a rally because it was so aggressive. So aggressively bearish previous day leading into London session for the overall indices. Very aggressive bullish move on a rampage to the buy side for DXY through previous day London session as well. Well, more so London. That has led to now a decline pretty aggressive in the DXY, and it led to this spectacular manipulation, bearish to bullish move in the indices. Let's chat about these shorts. Oh God, here we go with Byron. Here we freaking go. Byron is the counter trend trading savage. Okay, I'll be like, no, I don't think it's gonna short. I'm gonna continue being bullish, and then I'll wait for the buys, and then within the same couple minutes, Byron's in taking the short, leading up to the buy that takes place. And then he gets in line with the buys. I'm just like, bro. I mean, it's happened this year more than I've ever seen it, and so it's amazing, Byron. You're one of the most spectacular individuals I ever met. So yeah, let's definitely talk about the freaking shorts. Okay, guaranteed. Byron's in the short right now, taking it down here, targeting the freaking fair value gap. Oh man. If DXY tanks, I would be cautious. I would be taking profit. Definitely capture that though if you did. Freaking Byron. But yeah. So again, hopefully everything made sense. Every live call is just another piece to the puzzle for you guys here on YouTube. Every day, every live call every day in my private group for you guys that are part of my private group. Some of you guys are here. You guys know that it's another building block as well. And I mean, this was pretty spectacular. Classic buy day, essentially. We got the open price. Yes, we had the 9 o'clock daily open price, PM Pacific Standard Time. It was pretty spectacular. Let me see. Carlos said at this time he's just in and out. Yeah, exactly. Yeah, he don't hold for too much when he does these ideas. Sometimes, but yeah, he's wildly consistent with these retracements, timing the retracements. It's pretty spectacular. We all have our little strengths and weaknesses, and Byron definitely has a strength when it comes to the counter trends and the trends. Oh yeah. YouTube live stream pays. Let me show you something that happened. Carlos made $500 today. Not in any way saying that everyone's gonna make money. Carlos though, wait, is that Carlos? I think it is, huh? I think it is, right? Carlos, this is you, right? I think it is. Let me know in the chat. I think it is. Yeah, okay, beautiful. But yeah. Amazing. Let alone what's happened in here. Show you guys on YouTube. We got funded accounts taking place. It's amazing. Freaking Harley being a savage. Harley was a savage yesterday too. Can I play it? Yeah, let's actually give some time to Harley real quick. Turn that off real quick. This is what happens when you come to this community. This is a beautiful example of just, I don't even know how to describe it. It's just amazing. Harley started with me early on. Of course, he deserves pretty much all the credit. I just kind of helped with what I could help with. But he came to me super early, and his mindset, the things to focus on, how to conduct himself. I tried to guide him in the right direction, and this is what he's now become. and this is one of many. Like, he is one of them traders that's just like, wow, super quick. You know, not everyone, including me, right? I didn't learn as fast as he did, but then again, I also didn't have the resources that are available. I only had ICT, and you know, I have Byron and stuff like that, and a couple others. So I did have a little bit of help along the way. But at the same time, we didn't have a community like this. You know, look at all this. And this isn't me. It's not just me succeeding. It's all these students. Now, you see a lot of names, repetitive names, but there's also a big mixture. I mean, there's some trade here, like this trader here, Sebastian. You know, he the first time he joined me, I believe he passed the funded account. Look, see, he passed the funded account really, really quickly. See if we could pull that up. Because it was spectacular. Within a week, he turned around his whole funded account and passed the funded account. Had like 7 green days in a row just by watching what we do. So I think 2 of those days were on just YouTube alone. Well, I think one of them in that span of things. Let me double check. I think it was. Oh damn! I need to pin some more. Pin some more of this stuff. Yeah, watch it. We go to the rising funded accounts or funded traders. We got all these past situations from 2022. I need to go pin some of the other ones from as of late. Harley, for an example, $3,200 for someone that didn't start trading, or that wasn't trading for over even 3 years, but then comes to this group, comes to this community, gets some of my advice, puts in the work himself because he deserves all the credit. Like I said, listen to good advice, and a young man that's less than 21 years old, traded for less than 3 years, less than 2 years at this point, at this time, I think. I could be wrong. Harley, if you watch this, definitely correct me if I'm wrong. But little experience to doing something that, like I showed you earlier, that first video, and then making $3,200 in a week. Okay? People don't make that in a whole entire month at some jobs. $20 an hour, 40 hours a week. You don't even get this amount. Maybe close. Maybe close. Maybe my math is wrong. But I mean, this is like in a week what a part-time job 40 hours a week for a whole entire month would give you. As someone that's less than 21 years old, less than 3 years experience. And he's one of many, right, that have crossed paths with me. I have some students that work with me one-on-one that don't want to be part of the community, and you know, that's just kind of the way it is. It's been like I've had a lot of students that went that route, just work with me on one-on-one basis because, you know, that's just, I guess, what they're interested in doing. But regardless, I'm showing you all this stuff to just say that having a community like this, being able to be in front of or be with people like the people in this group, and, you know, not to toot my own horn, but to have someone that's going to tell you the realities of things, that proves that they can do it like I do on a regular basis, daily in my private group, 2 times a week here on YouTube, where we've proven that our bias and narrative ability to call the market where it's going to go for 11 straight months has been pretty solidly close to 100% accurate, let alone the live calls that we point out. I mean, it just kind of speaks for itself, you know. And the whole goal is to help, continuously try to get people to improve, because that's my goal with having a private group, with having this YouTube channel. You know, I'm not really here to entertain, although it's kind of entertaining to see this stuff just go crazy. And then kind of think about what you're going to be able to do with this stuff as well if you put the work in. But we're in a serious business, and, you know, there's fun times, but there's times I have to be serious, because when you lose money, that's serious. You know, when you hurt yourself and you got to get out of it somehow, it's a serious business. You know, you need someone that is not going to, you know, blow smoke up your ass. It's not going to constantly make you feel like they need to be worshipped. The only person to worship is God, not me, not ICT, nobody else. And you got to look out for frauds that won't even do part of what I'm doing. They won't even show you a screenshot that makes sense, that they actually engaged, let alone actually engage this stuff and call it live. You know, putting their neck on the line like I do every single week, every day in my private group. You know, and again, I have some private students here, and if I was lying or saying some nonsense, I mean, they'd be the first ones to come out and be like, hey, this guy's full of shit, don't listen to him. But they know the truth, you know, and those of you that may be new to this YouTube channel, those of you that may become new students in my apprenticeship group, just know that you're in the right place with the right people at the right time. And you know, there are good people in this industry, even though it's plagued by a bunch of scumbags in some ways. This is not part of that culture. You know, we're ICT purists, and if it was up to me, everybody would try to be ICT purists if they look to trade, you know, because it just answers a lot of the questions, you know what I mean? The why, the where, the how, all these different things. Right, so yeah, so keep that stuff in mind. And again, I appreciate all of you guys that have supported me from day one, and some of you guys that are newer supporters and newer students and long-term students, so on and so forth, future students, because you know, seeing you guys succeed makes it worth it for me to be out here live, you know, and have a private group, and seeing you guys grow and become better, focus on the right things, start to believe in yourself more, because, you know, society is definitely tried to encourage victimhood mentality, and you know, there's things that you could do to not make yourself feel like a victim, especially by choosing not to listen to that type of nonsense. You know, the market doesn't victimize you. You know, the world may be ugly at times. We all go through things. You know, there's always unfair things that happen to us, but having a skill set like this balances the playing field. It evens the score when you know what to do in this, because no one can stop you. Right? And nobody can take it away. All right, so yeah. So hopefully today's call has been valuable to you guys. I think we're gonna bring things to a close here pretty shortly. Definitely want to watch what this does. Remember what I said, coming up here, if we can't break outside of this and invert it, and DXY can get some legs again and continue to race towards the monthly high, maybe that happens soon. Maybe it happens for PM session. You know, or maybe it just keeps dropping, leaving that high for later. But I can't say if the DXY does rally up. You know, this may look to continue to drop if we can't show that it wants to get up above this. Remember, we still have this liquidity void. What's the difference between liquidity void and a fair value gap? We have a void of liquidity. There's not even a wick trading through that. Hence the name, liquidity void. It's void of liquidity. There's nothing there. So it has to go in there and make it efficient. Leaving that and pulling aggressively away from that, what do you think that's told people to do? Or it's encouraged people to do? It's probably encouraged them to try to get into buy positions. Right? There was buy positions, right? We got in and got what we wanted to secure and got out. You know? And in the grand scheme of things, this is technically simply a retracement. If we go to the daily chart, do see one candle that's been breached, secondary candle that's also been breached. So it's definitely interesting. Now we got a swing low violated. So we're going to have to see if it's going to continue to do this decline aggressively. But overall, it could at some point look to use this as simply a retracement to then go higher. Nothing structurally has been overwhelmingly taken out. Right? If you think of three PD arrays, we got this suspension block. We got a swing low. And honestly, that's about it. Right? That's about it. And we got the 50% of the suspension block. Pretty solidly holding in price here. See how it's closing above it? So we got to just continue to watch what that's going to do. Again, we're in the first week of the month, NFP week. If this is going to decline in here, right? We want to see DXY rally at some point. And then, of course, if that is what takes place, and we do continue to leave this as an inversion in here, this 5-minute fair value gap. Drop down to the 30-second chart. We could start to somewhat paint a market maker sell model that may end up being used to target this liquidity void. All right, but we'll see if we get back above this 5-minute fair value gap. I think we'll have the opportunity to get back above the 1 hour. 1 hour fair value gap. But yeah, as long as this stays below this gap in here, if we move up a little bit, of course we definitely want to go see what the bodies of the candles are doing here. How these close. If it just provides wicks down there and then we get displacement above the high, that's showing that this is pretty solidly being respected. So we'd have to continue to consider this as a potential support level or a valid PD array. But we may see this 1 hour fair value gap hold more precedence over this 5-minute bullish fair value gap, at least until we get down to here. If we end up staying below this, again, I'd like to see this get targeted at some point. London low too. Right. But again, before we sign off, again, I do appreciate you guys. Thank you for sticking with me. All of you guys that are long-term students, those of you that just hopped on or just found my channel and enjoy what it is that I do here. I thank you guys for spending time with me. It's much appreciated. Your time is valued, which is why I try to put as much value as I can in every video that I provide publicly. Because the last thing any of us wants to do is waste our time, and this, I assure you, is not a place where you will be wasting your time. But yeah, aside from that, hopefully you guys got value today. Let me know if you guys have any questions as the day continues. We'll be live again on Sunday here for YouTube. And let's go double check this real quick. So tomorrow we have non-farm payroll, or a part of the announcement. Then the real announcement comes on Friday. NFP is a 2-stage event. NFP protocol for the week is generally where we pretty much do most of the trading early on in the week. Later in the week, like beyond Wednesday, we got to cut our risk. Only allow for one opportunity to be engaged, because you never know what could happen. NFP is a wild card. CPI, FOMC, when rate cuts come out, those are all wild card days. It could do whatever the hell they want it to do. The invisible hand, right? That kind of pulls the strings in the market. All right, so yeah, with that being said, we're going to have managed expectations going on through the rest of the week. It's, again, just a reminder, it's the beginning of the month, so think monthly power 3. So the first week is generally going to be consolidation and manipulation within that monthly range. Okay, that may bleed on to the second month or the second week, but because we're in the first week, we want to make sure we're keeping attention to that and acknowledging that. We want to also consider the fact that NFP is a 2-stage event. Okay, we're also at the end of the year almost. seasonally, November and December can be a little bit more difficult to trade. So you have to really know what you're doing. It's never a time to overtrade and over leverage, ever, which is basically going beyond two trades, maybe three, if you've adjusted your risk to support an extra trade, which means you have to drop the risk of the first two. So you want to make sure you're not doing too much craziness. Aim for 20 to 30 points. Okay, don't try to do too much, because 20 to 30 points is very simple to accomplish eventually. And those of you that spend time here that have been with me for a while, you know this to be true. And you also know how powerful it is as well, because again, like I mentioned earlier, I literally did a challenge, right? I gave myself a challenge to pass a funded account just by using the very limited rules that I give you guys, right? No pushing hard at all, no over trading, no over leveraging, except one day that I mentioned. I traded 4 times on one day and it resulted in a loss, right? And I mentioned that too when I did the video where I was discussing that, right? But for the most part, it took, I think 3 or 4 months to pass the challenge account. So be patient. Do not do too much. Don't overtrade and over leverage. Remember the landscape we're involved in right now, and we're going to continue to, do what we do. And again, I hope you guys got value from today. Thank you guys again for spending time with me. Hopefully you got nonstop value. And those of you that are new, thank you for the support. Fancy said, great stream, bro. Really enjoyed it. Oh, yeah, I appreciate you, bro. I'm glad you enjoyed the stream. One of many, right? But yeah, if any of you guys got questions, let me know in the free Discord. Those of you in my private group, let me know if you need any help today. I'll be available after I hang out with my daughter. And yeah, we'll be live again on YouTube on Sunday. And you guys in my private group, we will be live, as always, every single day the rest of the week for like the remainder of, life, I guess. if we keep the private group alive or around for, the remainder of our lives, right? Which I intend to do. So yeah, with that being said, God bless you guys. Hope you have a good day, and I will talk to y'all next time.